My name's Alex Perney. I'll be your presenter today. I've been with Advanta since the spring of 2012. Started out doing transactions for clients, then moved into educational and marketing. With regard to handouts, you can certainly request a copy of the slides, but there are no per se handouts that I can necessarily send out to you for that. So if you have any questions after that, um, please do feel free to contact me. My direct contact information is right up there. Give me a call. I am certainly happy to answer any questions to the best of my ability. Now, before we do get into specifics and the key points that I want everyone to take away from this, I really need to make sure everyone understands that the purpose of this webinar today is for educational purposes only. Advanta and our employees, we do not give tax or legal advice. We encourage all clients to seek professional guidance from either tax accountants, attorneys, or advisors before entering into any type of financial situation or making any taxable determinations. And that is imperative specifically in these times as well. It is very important that if you're going to make a large decision, that you maybe give someone a call, especially with some of this new legislation. A lot of this is going to be very dynamic with regards to how it is implemented and also what the long-standing implications for you as the taxpayer are going to be. Now, the few key points that I want people to take away from today are going to be the changes to the IRA distributions and 401k participant loan rules, the disaster relief SBA loans versus the payroll protection loans, which are also governed under the SBA as well, and then individual assistance and unemployment assistance and what that means to individuals specifically. And then also, if you are a self-directed IRA owner and you have rental properties and you have people that rent from you, what you can do with some of the funds and how you can help your tenants to maybe help make sure that things are being kept, payments are being kept up with, and specifically how much they and you could potentially claim from some of these government programs. Now, again, please do make sure that you type in any questions that you have. I do not have any audio for any of you on. It also needs to be and any raised hands that won't necessarily get to. Okay, so with regards to IRA and 401k distributions and contributions as well, there's going to be a lot of things that are going on with these. Now, if you are an individual that is over the age of 72, remember the required minimum distribution age for individuals has increased. So previous years it was 70 and 1/2. Under the new tax plan, under the new Secure Act, which is completely separate from the CARES Act, which deals with coronavirus, the age for required minimum distributions was raised from 70 and a half, or from 70 and a half to 72. Now, individuals this year whom have already taken a required minimum distribution, unfortunately, there isn't any recourse for you to put it back into your IRA. That you can't roll that back in, unfortunately. But if you have not taken an IRA required minimum distribution or a 401k required minimum distribution, you do not have to do that for the taxable year of 2020. So that requirement has been suspended, which can be good to an extent if you want to try to make sure that you're keeping as much tax sheltered money as possible and also trying to help reduce your taxable burden. It's not so much on the implication of individuals not wanting to take money out, but if you're trying to save money, especially on taxes, then the ability to defer that required minimum distribution payment is going to be great. Now, as far as what I have seen, there is not anything that is in the legislation or anything that has been regulated now stating that you have to take a double required minimum distribution in the year of 2021. You would just have the ability to exempt yourself from having to take the required minimum distribution in the year of 2020. So that's a really big benefit, especially for trying to save on taxes. Now, 401k participant loans. To give a little bit of background, a 401k participant loan is different than a distribution in the traditional sense. For most 401k plans, you are allowed to take a loan personally out of your vested balance of that 401k. You are allowed to take up to $50,000 or half of your vested balance, whichever is less. Now, there's been a few rule changes with the 401k loan requirements Yes, Mary, I am speaking. Everyone else seems to be able to hear me just fine. One moment. Okay, I just okay, great. So back to 401ks. So you were allowed to take up to 50% of your total invested balance or $50,000, whichever one is going to be less. You had to repay that loan over a 5-year period at a point above or below prime with at least a quarterly payment. Now, that's all well and good. That still exists. But what they've done is that they've now upped that. So now if you are a qualified individual, now you have to be, not to go too far into the weeds, but you have to be a qualified individual in order to qualify for taking the 100K out, which also removes your requirement in order to um, take that half of your vested balance. So if you had, let's say, $190,000 in your 401k, you can take out the full 100 under the CARES Act if you are a qualified individual, meaning an individual that has been diagnosed with COVID-19, you are in the care of someone with COVID-19, or you are paying expenses for a dependent of COVID-19. Now, how exactly do you prove that? Well, that's going to be when you file your taxes, you're going to need to make sure you're keeping good records. So just a simple affirmation probably isn't going to be the most prudent course in this. You're going to need to save receipts. You're going to need to save medical bills. You're going to need to pay hospital records. Anything that's going to test results. Someone that is tested positive for COVID-19. You don't necessarily have to be in the hospital for some of these things under the determination of um, being a qualified individual. Um, Now, with regard to this, you can do up to that $100,000 per plan, so long as you're not covered under uh, control group rules. Now, Frank, I don't know the answer to that question. That's a good one. Frank asked, what if you already have an existing $50,000 loan? I believe you would be able to take another 50 out because I believe it is a concurrent total amount per plan. So I think that if you are a qualified individual, remember that's the key is you have to be a qualified individual for this type of exemption or the increase in the amount that you can take out. You would be able to take up to 100 grand. Now that could cause some potential issues because essentially that would be a different loan. It would be have its own 5-year period that it would have to fall under. So I will look and try to get an answer for you on that a little bit deeper just in my research for this presentation. I don't know, but good question. I will certainly try to get you an answer on that. And Diane, yes, this is being recorded, so you can watch it on our YouTube channel when the time more convenient if you can't stick around to the end. So that's really good with regards to being able to take out the 100K for the 401K. Now, again, if you are covered under multiple 401K plans, and let's say you're not an owner of the businesses that those 401Ks are under, you work for 2 different companies, or let's say you're part owner in a company, but you're not considered a controlled group individual, and the key there is control group. I'm not going to get into that, but just understand if you're trying to do some research, control groups do come into play. You can potentially take out multiple loans from different 401ks. So you can take out one, one from somewhere, one from another place, and the like. So just keep in mind that that is an ability you do have. Okay, sorry, just answering. A few people seem to be having. Okay, yes. So, yes. I will certainly look into that. The issue of if you currently have a outstanding participant loan, what the matter of that is, and what I can probably do for everyone. If you have questions I don't know the answer to, what a good idea for you to do is rather than just kind of trying to remember to email me, it's gonna take me a little bit longer. Um, But I'm going to write these down, and when we send out the recording, I'm going to include an answer to some of the questions if I don't have them now, instead of trying to take up too much time. So yeah, if I can't answer your question, I am more than happy to do the research, and then when we send out the recording, I will have some of the bullet pointed questions that were answered that I couldn't get to. So 50K. Okay. So now moving on to IRAs for with regards to distributions. Now you have to remember that you need to segregate your IRAs and your 401ks with regard to these distributions, because there are differences that you need to be aware of, even though they may kind of seem to get intermingled when people talk about retirement plans. So you can take a penalty and potentially tax-free distribution of up to $100,000 for virus-related expenses, and you have up to 3 years to repay from an IRA. Now that can be a Roth or that can be a traditional. Your 10% early withdrawal excise taxes waived, and potentially you can have no taxes paid on that as well if you repay that amount in full within 3 years. Now there's some stuff to unpack with that. So let's say you are a qualified individual. So again, another good idea is I will include specifics, that, like the long form of whom a qualified individual is. Okay. So and Michael, I see your question. Let me just get through a little bit. Actually, let's answer Michael's question. What about distributions for workers whose incomes have been cut or eliminated because of um, the virus? We will certainly get to that. It's a few slides in regarding relief payments and also loan payments that can be done through SBA to help offset some of those costs depending on how you're employed. Michael, if you don't mind indicating, are you employed through a excuse me, are you employed through a larger company, or are you self-employed? Because that has a big determination. DC asked, does a qualified Roth distribution taken last year count towards adjusted gross income? No, it does not count towards AGI because you don't claim it as earned income. It is pension income that is non-taxable. Social Security, unemployment benefits, 1099 work, stuff like that would qualify as earned income for purposes of determining AGI. So penalty and tax-free distributions. So with an IRA, you get to take out, you can potentially take out up to $100,000 for virus-related expenses. Again, having to qualify as a qualified individuals, and you have 3 years to repay. Now it brings up a few interesting caveats with that. One, it is not per IRA. So look at your IRAs as a totality. So just like when you're calculating your required minimum distribution, you have to look at your total IRAs. You can take out up to $100,000 from them. So if you have, let's say, $300,000 IRAs, you cannot take out 300 grand. You can take out 100,000 grand, or 100,000 grand. You can take out $100,000, but it's a cumulative against all of your totals. So if you have one account with 50, another account with 50, one with 50 in it, or I think people are understanding what I'm trying to get at. You can't take it from each individual one. Now, it brings up an interesting point with regard to tax reporting. So when you take a distribution and you normally do a rollover, it's within 60 days. So typically people don't have the issue of saying, well, I took a distribution 1 year and it's not reported to the next. Typically, when the IRS looks at that, you report that you took a distribution, and then let's say it's the end of 1 year, you roll it into another account. The reporting is done in such a way where there's such a lead time on it for reporting rollovers from the custodian that there's never really an issue with the IRS. It's done. They kind of go back and look at them in previous years a little bit. But with 3 years, it brings up the question, well, how do I claim this? Because if you don't repay it after 3 years, it becomes taxable. So if you don't use it for coronavirus related expenses, it becomes taxable. So how do you claim this? Now, if it's a rollover and you have up to 3 years, do you need to claim it as income 1 year and then file and take and then amend your filing for that original year to get the tax refund on the taxes you paid on it? Do you file that as income in the third year if you decide to take it out and not roll it back in? And when do you file that stuff? That is some stuff that has not been answered yet. The IRS is certainly going to look at it, but it's definitely some good questions, especially when you're talking about taking an additional $100,000 of potentially taxable money out of one of these plans. My best guidance to you would be to contact your CPA, but the likelihood that they are going to require people to file it and claim it as additional income and potentially have to pay a lot of money now in taxes, I would think to be low, just from the fact that they're trying to help stimulate people. And if you tell someone that they take out $100,000 for related expenses to COVID-19 as a qualified individual, but they have to potentially pay $20,000 in taxes on that, well, now you've only really let them take out $80,000, and that seems to be kind of defeating the purpose of some of this legislation. So again, we don't know how that's going to go, but you should still try to understand that there is some ambiguity with this, and we will be doing follow-up webinars on that particular point and needing to know when you're going to potentially file that as income, or how you're going to actually make sure that you show it as a qualified rollover. Okay, Lynn has a question. Good time to get to one before we switch boxes on this. Is this two different options, only not taxable use for qualified expenses, or borrow for anything COVID or on COVID and repay within 3 years, so not taxed? So you have to be a qualified individual to qualify for taking it out. But if it's utilized for things that are other than COVID expenses, then it would be taxed. Now, it kind of brings up a good catch-22, one that I hadn't seen. So honestly, that is a pertinent question. I'm sure it will be answered in tax cases coming up. Okay, so with regard to virus-related expenses, to the individual, no, but corporately, yes, there are carve-outs for mortgage-related expenses, especially if you are an individual, sole proprietor, or self-employed individual. Okay, Nathan says that his accountant said that all they have to do is have COVID-related troubles. Again, a lot of the stuff is very ambiguous. Unfortunately, the guidance I can give you is only so well as, I've interpreted what I've read and what I've researched. And keep in mind that, let's see, about 850 pages of legislation for this stuff was written, approved by the House and Senate, and signed by the president within about 2 weeks, or maybe a little bit less. So there's a lot to be desired with regard to clarity on this, and there probably will be a lot of clarity and things issued in the future. But with regard to having COVID-related troubles, they are pretty specific in saying qualified individuals, but it does leave some vagueness with regard to that if you have a dependent that is having COVID-related troubles. But keep in mind that if it's just personal things, there is the other portion of this bill that relates to direct personal payments, that relates to your ability to apply for SBA loans if you're self-employed, the additional unemployment benefits that are also going to be going out as well, which are going to be more towards, if you've lost your job, helping you make those payments. So I would think that with regard to the IRA and 401k portion of it, it's probably going to be a little bit stricter with regard to like medical costs and having a positive COVID-19 test, because the portion of it that is going to be covered, the additional unemployment assurance and unemployment benefit portion, is going to be going more towards the individual needing to pay personal expenses such as mortgages, food, that kind of thing. Mark, let's just get to another box. I will put a pin in your question, and we'll get to that in a minute. So another big thing is that contributions can be made until 7/15 for what we can best determine. I would encourage people, if you can, make it by your timely filing deadline of April 15th. it's going to be best practice. I don't foresee any issue with the IRS having an issue if you are filing your taxes for making a contribution for 2019 up until 7/15. But keep in mind that the 7/15 extension is only for timely filers. If you are going to be filing for an extension, that has nothing to do with it. Your extended deadline is not pushed out. So if you need an extension, you don't get much more of one past the the July extended deadline. Um, and that goes for 1040 and 1120. 1120 are corporate filings. But if you do file on an um, augmented year, you have a different financial fiscal year, you still have to follow that. It is only for people that are going against the standard filing deadline for corporations with regard to extensions and personal timely filers as well. Let's see. So Mark asked, so my wife is self-employed and is still working. Does that limit what she can do of terms in taking the distribution or loan? And is it limited to the amount of her 401k, or can she borrow across 401ks and IRAs? Well, the key in that is that she's still employed. She's going to have to show that she is unemployed or has had a reduction in business to the point that she can qualify for the SBA loan application. And that's going to actually a good time to go into. Actually, no, it's going to be a different slide, but Mark, that's going to be more towards the actual loan application or disaster loan application. So there are two different, and we'll get into this a little bit more. There are two different portions when people kind of hear about the small business stimulus. So the 350 billion that has been carved out of the CARES Act going directly towards small businesses. Now that is 500 or less employees down all the way to self-employed individuals. There are disaster relief loans, and since this has been declared a national emergency, everyone can qualify for up to, that's self-employed, can qualify for up to at least the $10,000 of immediate grant, kind of like a grant loan that the SBA gives out under the federal emergency guidelines. So there is that, but then there's also the portion that they can apply to directly through the payment protection agreement, which is regarding payrolls and things like that, that do also go down into the self-employed individuals. With regard to borrowing from the 401ks and IRAs, that is for individuals directly related to positive COVID-19 testing or the care of an individual that's a dependent or immediate family member. So that kind of stuff doesn't really bleed into the help for businesses. That's a little bit different portion of the bill, but there is certainly a lot of assistance for businesses, including self-employed individuals as well. So we'll circle back to that here in a minute. So what has been getting a lot of press is the unemployment assistance, or when people just say, hey, the government's going to be sending out $1,200 checks or $2,400 if you are married filing jointly. So we're going to cover that here, and that's going to be a portion of more to what is going to be helping people with meeting payment requirements such as rent, mortgages, and especially if you're a landlord, this is the kind of stuff that you should probably brush up on. And it's a good thing to help your tenants too, but by past just being a good thing to help them with if they need assistance with doing this, if they've lost their job, they have other expenses besides just paying rent. It can also help you in the sense that if they can continue to pay rent with this assistance, which is pretty good for the most part, there's a significant amount of money that's going to be paid out to people. Can certainly kind of that rising tide can raise all boats in this situation. So the Pandemic Unemployment Assistance, or the PUA, is what this is going to be abbreviated as. The individual needs to be, they can be self-employed, they can be an independent contractor, they can be a gig worker, a part-time, and any people who previously did not qualify for unemployment assistance or unemployment insurance. So it covers a lot of other people that wouldn't necessarily have been covered under previous unemployment regulations. Now, keep in mind, unemployment regulations and unemployment qualifications vary widely. And I like to put a lot of emphasis on widely because there are essentially 50 different requirements in the United States for unemployment assistance, because each one is legislated by the individual state. And the amount that you qualify for per week varies from individual state as well. Now, under this agreement, these additional payments that the government's going to be making on top of the unemployment assistance offered by each state is going to be paid from 39 for 39 weeks, and the state, in addition to the state regulated unemployment insurance payment. So here's what the minimum benefit that someone's going to receive from the government is going to be equal to one half of the state benefit. So let's say your state benefit is $250 per week. So you're going to get $125 from the federal government plus $600 per week. So $750 per week on top of that 250, which is pretty good. That's probably going to be more than um, some of these people are actually making working, which again is good that they put a cap on this, but it's also good that it gives people breathing room to continue their normal lives, to continue with putting money back into the economy and not being so strapped that people are not going to be engaging in any type of economic activity, like things like paying rent and other things like that. Again, great for you to talk about this with your renters. The websites are quite a bear right now to get through, and the like. Just a personal anecdote. No one's immune from this. Personally, my wife works in the hospitality industry. She had to go through the assistance website for the state of Florida, at least, and websites are woefully under-equipped for this. It takes a while to get through. I would encourage anyone that needs help with doing this stuff to make sure that you just keep at it. Keep going through the websites. It is quite garrulous, to say the least, to get through these websites and to get the assistance that you need if you qualify for unemployment, to try to help mitigate some of the cost of really not being able to do anything or apply for other jobs. And that's the big issue here. So just keep in mind that I'd say from personal experience, if you or a tenant or anyone is having issues with the state-run websites, just keep at it. It might take a few days, it might take a week, but eventually you'll get through. It's a matter of server port, it's a matter of personnel. We've never seen anything like this in the entirety of our generation or for several generations before us. So just keep in mind that some of these systems weren't built for these huge influxes. Okay, let's see. Phil asks, what about someone who received unemployment benefits, not eligible again until summer? Does this extended benefit plan allow them to start collecting the difference between the amount received and the new amount? The issue with that is that you're going to have to check with your state, because the way that these payments are made is that they are being made through the state's unemployment assistance programs. So when you actually go to apply for unemployment assistance in your state, you're going to have to go to them, and they might have a different portal for you to use, but they've waived a lot of the requirements. At least here in the state of Florida, I know from my personal experience, they have waived the requirement to be searching for work, since there are really no jobs out there. You used to have to apply for 5 jobs per week. They've waived that requirement, so they've reduced a lot of the requirements. And the like, they may say that you only qualify for the government assistance. You're going to have to check with your particular state. If you could let me know, Mark, what state you're in, I can include that on the email that we're sending out regarding the stuff that I don't know the answer to on this. I'm happy to do some research and try to get an answer for you. Okay. I'm sure that's Phil that asked that. Okay, let's see. Michael asks, wife is self-employed and was told by unemployment office she was exempt. What does that mean? It can mean a lot of different things. I would call them back and see what they mean by exempt. Exempt from benefits. I mean, if you are unemployed, you should be able to file for unemployment insurance through your particular state. What they might have said exempt. There are some exemptions, as I said, with having to actually show proof of seeking reemployment or some other things. Exempt from that, I don't know. It can be a wide array of things that they are actually saying. Let's see. DC asks, is a self-employed person still eligible for the PUA? Yes, absolutely. If they just started Yes, you are absolutely eligible for this. If you need it, you can certainly apply for the PUA if you're self-employed. Uh, Clyde asked, "Will you give us the website? Which website are you looking for? I can give you several. Are you looking for the one for the state of Florida or the like? Do you know if people who didn't previously qualify can start apply in Florida? Yes, I do believe so, Frank. Okay, Mark, you are in Georgia. Thank you. And Phil is Florida. So I will look into the the previously non-qualified individuals for both states of Florida and Georgia. And if it's not too long, maybe I can find somewhere that has a comprehensive list and I can send that out. But I'll at least get Florida and Georgia covered. Okay, Mark says, I have a similar situation to Bill. My company was purchased and I have exhausted my benefits, but all unemployment conversations I was having stopped due to the virus. So, okay, so with regard to that, Mark, I'm assuming you're saying that you have exhausted your unemployment benefits, but with the government, I believe those have been waived. Again, I just need to get a specific answer. It wasn't something I specifically researched before doing this presentation. Um, okay, great. Good. Got through all the questions. Again, keep them rolling in. I will do my best to answer them as well as possible. And again, if I can't, we'll make sure they get on the email as well. Um, Now, to get the unemployment assistance, you must meet the requirement for partial or fully unemployed, past just unemployment benefit. You have to meet the partial or fully unemployed benefit, or you are diagnosed and or seeking treatment for COVID-19. So if you have a positive test, you can also apply for the unemployment assistance as well. That's an additional portion of this, not just necessarily being healthy and unemployed. You can qualify for the PUA as someone that is seeking treatment or has a positive diagnosis. Now, again, keep in mind, this is very important that you keep any and all of these records, because if you claim assistance for this stuff and you go through an audit and it's determined that you don't qualify, you have just lied on a federal application for something, and that can be jail time. It can be very serious, and I would imagine, unfortunately, there will be a lot of people trying to take advantage of this. My advice to you, everyone on here, I'm sure, is trying to do the best I can to do it correctly. It's just this is a very good time to save any and all records that you may think that you need to save with regard to anything that's going on if you're applying for assistance in any way. Let's see. Oh, whoops. Okay, so that's going to be it's going to be gross income. So your AGI, Michael. So here's how it breaks down. And if you want to look better into this, the internal revenue codes are up there at the top for you for the stimulus checks. So it's $1,200 per individual, and it's $2,400 per married couple. Now, the payments are going to be phased out. So if you make a ton of money, the theory is that you're doing well. You probably don't need this assistance. You should have been saving money. If you haven't, then shame on you, is what the government's trying to say. So these phase outs start at $75,000 for individuals filing for individual filers and $150,000 for married filing jointly. Now, they're going to be reduced by $10 per every 100 that you make over that amount. So, if you make $76,000, you're going to get, as an individual, you're going to get $1,190. Pretty simple math. Now, you are fully phased out if you are a individual making more than $99,000 or a married filing joint couple with 150, or sorry, it should be 198. I missed there. So it's double, essentially, for the married filing jointly on that. Should be 198, or sorry, it should be higher. That's the fully phased out. Now, keep in mind that if you have filed your taxes already, the first people to get these payments are going to be the people that have already filed a tax return for 2019, because they're going to be sending this out via direct deposit. Now, if you have not filed 2019, if you can, I'd recommend you go ahead and file it, because I would imagine, obviously, the Internal Revenue Service and the government's not going to say who gets the front of the line, but it's probably the people that have timely filed their taxes. Next people in line are going to be the people that have filed 2018 returns, so they'll go back and look at that. If you were not, if you did not qualify to uh, file a return, you need to make sure your address with the government is up to date. You need to file an IRS form, which I did not put the form number on here, but you need to make sure that if you are going to be receiving a paper check for whatever reason, they don't have your information, that they have an accurate address. Otherwise, you are going to be hunting this down for quite a while. And with how many people should be receiving these stimulus payments, that could be quite some time. Okay, great. Got some good questions. Let's get through some of those. DC asked, "What if you had to stay home because you were over 65 and diabetic? Does that count as pandemic unemployment, or do I have to be COVID sick?" Again, with something like that, I would think that would qualify you under the qualified individual. You have a hardship related to, COVID-19. Again, that's just my kind of thought. I would check with a CPA or an attorney, and there's a good one on here with a webinar that is about 3.5 hours long that I'll get to the link to in the end of this. He gives a lot of really good information. He is a very thorough person in answering some of those questions. So again, if you go to that webinar, that might have a little bit more of the in-depth stuff that you're looking for. At minimum, I would think that you were going to be qualifying for the unemployment assistance, assuming that you are, staying at home and unemployed for that. And then at bare minimum, if you have a 401k, you could take a $50,000 loan out of that, with regard to the additional 100, and then the 100 being distributable out of your IRAs. Those are the ones that I'm honestly not sure on. I can try to get some more clarity on that with regard to a high risk individual not being able to, kind of being forced out of the workforce with that. Yes, that I did see that, Mark. Yeah, so the fully phased out one should be 150, and then 198 are the phase outs for the actual full phase outs. Yes, it's 99 and 198 are the full phase outs for being able to get those. If I phase out for 2019 but wouldn't for 2018, Charlotte and the coverage. Again, it depends on how Alicia. So what Alicia asked, if I phase out for 2019 but wouldn't for 2018, should I let them use 2018, or will they recoup the overage? I don't know. That's not something that I know has been written in. But again, depending on how quickly you need the assistance, then that might determine whether or not you want to wait to file your taxes for that. Again, those are going to be the second people in line. If you had direct deposit for any return you were owed, are probably going to be the people that are going to be later in line. And depending on how much your face out is and how much you need the money, might determine how much money you actually need to, or how readily you need to apply for that. Let's see. Merrill asks, I have a rental condo purchased in my self-directed IRA, many cancellations due to the virus and beach shutdowns. and losing revenue due to these cancellations. Potentially, yes. You might have some stuff that you can apply for. So if I don't, and then Mark asks, so if I don't qualify for 2018 but qualify due to 2019, I've not filed 29 taxes yet, then I need to file taxes in order to get this, and is there a time limit to do so? Yeah, if you want to get it, you would need to file for 2019, and the time limit would be augmented to 7/15 in order to have them, be able to pay that. I would say that it might behoove you greatly to go ahead and file them as soon as possible, or maybe try to do it by the timely filing date because if anything, in my assumption is that the government, when they do these, is probably going to take a snapshot of everyone at 4:15 and start issuing payments to everyone that has filed timely. Then they're going to probably take another snapshot in July and see everyone who's paid and if anyone else is owed. So that's what I would kind of go on. Again, that's just an assumption, but that seems rather logical for what they would actually do, just in at least my opinion. Let's see. It's Nathan asks, it seems that everyone in the world would qualify to borrow 100K, as it says, who owns or operates a business that has or had a financial um, or adversely affected. Um, I'm trying to open this wider so I can see your question. Just bear with me for everyone. I'm trying to. Okay, I'll just try to read the small portion of this. It seems everyone in the world would qualify to borrow, as says who owns or operates a business that had hours or financial situations severely affected, so that every person in the world. So my question is, what would happen if I violate my SDIRA? Will I forfeit the entire from this? Secondly, what if I took 100K, invested in the stock market, made 25K in 3 years, pay back the 100K? Um, yeah, so if you took it out and didn't repay it, you would have to pay taxes on whatever amount you didn't roll back in. In that same scenario, Nathan, if you took it out and then had earnings on that and then you rolled it back in, $25,000 would be taxed at whatever applicable personal tax rate that would be, whether that would be short or long term capital gains, but anything that you do with that money outside of it, if you do have any earnings, would be personally taxable. Let's see, Lynn, if you don't get the $1,200 now but do qualify in 2020, then you will get it when you do the next tax return. It is an advanced refundable credit. Potentially, yes. I did see that. It was just something that I was a little bit leery of. But again, I'm just trying to wait to see how this stuff plays out since it's so dynamic. Since it is a tax credit, it can be potentially carried forward into 2020 filing, since you were in the middle of the actual disaster that the tax credit was being implemented for. All right, great. Next slide. Thanks for all the questions. It's really, really, I'm assuming, helping a lot of people out. So the PPP and the SBA disaster loans. Now, there are two different portions of this when people talk about these loans that are being made out. So the PPA is the payroll protection payments. Now, this is going to be what you're going to be able to qualify for if you have a business that is 500 individuals or less. You are going to be able to qualify for a loan that is going to be determined on your average monthly payroll of the previous year. Now, that can include interest payments and other different types of payments related to that business, but it's more focused centrically on your actual payroll. So you take your total payroll for the entire year, payroll taxes, stuff like that, figure that out, divide by 12, and then multiply that number by 2.5, and that's going to give you the total amount that you can qualify for the payroll protection SBA loan. Now, this SBA loan is administered by the SBA, but it's actually issued by SBA approved banks. So you're actually going to be interfacing with the actual bank for that. Now, each bank is going to have some different requirements as to what they need in order for you to actually be able to apply for that loan, and that can vary widely. I've seen some anecdotal things such as a bank requiring that you be a credit customer in order for them to issue you that loan. That you need to be an actual active business client of theirs, not just a passive deposit client, some other things like that. So there are over, I think, 1,800 or 1,400 banks. If you go to the SBA's website, they have an updated list of whom you can go to if your bank is not a an SBA lender. So there are some good resources out there to just go to the SBA's website, and you can figure out whom exactly you are going to be paying. Now, these loans are forgivable so long as you retain your workers. That's what you have to do. You have to be able to retain your workers. Now, retaining the workers, you can augment pay to a certain extent, and forgive me, I don't have that number, but it doesn't necessarily have to be at full pay. Um, uh, so yeah, Frank, that's a good point. I did include that in here just because it's there's a lot to cover, but I'm sure I'll probably do a follow up webinar as well for the idle payments. Um, and what Frank asked, there's another program out there called IDLE, EDIL, administered through the SBA, which can be forgivable, which has been augmented for that. Again, that's another rabbit hole. But getting back to this, uh, these loans can be forgivable so long as you retain the workers for your business. So you can use it to pay contractor, payrolls, utilities, rent, interest on loans, and your employees. If you use the funds for these purposes, the loan is forgiven. Now, a good thing about that is that it is more or less treated as a grant, not necessarily forgiven or wiped. Because if you, in the normal course of operating a business, have an outstanding debt that is just removed, you have to claim that as income and potentially have to pay taxes on that. Because essentially that loan was just a gift or just a payment made to your business. This is not. This is going to just essentially be wiped as and treated as a grant. There's no applicable taxes that have to be paid. Now, if you don't, the payment protection plan loans, remember they're non-recourse. They don't require collateral. But if you don't have the loan converted, it can be repaid over 10 years at 4%. So it's still a pretty sweet deal. They don't jack up the rates humongously, but let's say you need to do something to kind of pivot your business strategy. You need to do something that is kind of outside the scope of that with that to maybe even help keep the people employed. You might just have to convert it over to the 10-year at 4% for that. And you can use these loans if you are self-employed as well. Let's see. What qualifies as a business for the loan grant? Sole proprietorship with a occasional client, or what would, no, let's say I'm gonna click on this. Okay, let's see. Trying, forgive me, the way this question box, some of the longer questions are hard to read on my end. Okay, Phil asks, what qualifies for a business for the loan grant? A sole proprietorship with very occasional client, or what about a business that is just being started? Business has no payroll to date. So from my understanding, the business would need to have been established in a previous year. I'm not exactly sure how that goes for the PPA. I think you might have to apply under the idle payment program for that. I think that has more to would be more specific for newer started businesses with regard to a new business. With regard to a sole proprietor with occasional clients, you would need to show that there was some type of an effect from that. If you only have very occasional clients, let's say once a quarter, and it's hard to say if if you have a canceled contract, or you don't have that next client done in a period that was commensurate with what you've been doing previously, I would say something like that would qualify you to show it. And remember that if you claim something, it needs to be factually true, because you are making a claim on a federally subsidized loan. So you need to make sure whatever you're applying for is correct and relatively verifiable. Let's see, DC asks, for PPP, I had 11 1099 and 1099 contractors, but 3 were replaced. Do I have to hire them back, or do I just need any 11? Do they each have to be paid the average monthly rate? Great question. I do not know. Let me just put that as a notation for 1099 employees hire back. Let's see. Iva asks, can you also use it if you are in a partner in an LLC getting guaranteed payments on which you pay social, I think you meant Social Security tax, and use that to fund a 401k? Guaranteed payments from what? I don't exactly know the question to that, but it's pretty broad. I would assume so long as you can show the financial hardship of this, then you would be able to apply for the PPP. So again, and some of this stuff can be a little bit better answered if you find an SBA lender bank and go through the application process. I just spoke with one of my clients yesterday. He said it took him about an hour and a half to get through the uh, the application for everything for the PPP. It wasn't too bad. So if you get through everything and answer the questions, again, they're going to ask you for what you're actually going through for this. And by going through the application, it might honestly answer some questions for you that I can't. But again, I don't exactly know what you're talking about with a guaranteed payment. So oh, so you are a partner in a multi-member LLC and you're receiving something like K1 payments, right? Or sorry, yeah, Schedule K1. It depends on how you file that for your income, but yes, as a partner in an LLC, if your income from that business is disrupted, you can potentially apply for the PPP. But again, check with a CPA or an advisor and also the bank that you are requesting the payment from. So a few odds and ends. All SBA loan documents are federal loan applications. It's very important to be factual. It is a crime to misrepresent yourself on one of these. Now, again, there's probably going to be in coming years a lot of scrutiny on these, and the last thing you want to do is kind of be picked out of a random pile and have an issue with yours. So make sure, it may take a little bit longer, but make sure you cross your T's and dot your I's when you're applying for this stuff. I would recommend talking to a CPA at minimum. An attorney would be good, or someone that is very familiar with going through SBA loans and the processes for them. You can only apply for one of these loans that includes pending applications. So you can't put out like 5 applications and have them pending. You can only get one of these. So you got to make sure that for that particular business, you can't put out like 5 and see who gets you the money first. You kind of got to pick one, and if they deny it, then you got to go to another one. So just keep in mind that you have to do that. Although the 401k loans have been increased, you still have to repay them over 5 years with at least a quarterly payment. Uh, do you know the last date when you can apply? I'm trying to get my taxes completed in 3 weeks. No, but here's the issue, Mikhail, is that there's only $350 billion allocated for this. So if that money goes and you haven't filed your taxes and you're waiting until after to do that, you might miss out on some of this stuff. So that's kind of the rub. Some of the math that's out there is that if you have 300, roughly for the amount of small businesses, according to the 2018 filings, for people who have less than 500 employees for which the data is available, if you divide this out, assuming that every single person applies for this and gets some of that portion, it's only like $16,000 per business that can potentially go out. So unfortunately, it's kind of a derby race to get in there and get your application in if you want to try to get as much money as possible from this program right now. Will there be additional economic stimulus that comes along with this? I would say the likelihood is good, but again, do you want to be waiting for that to come out and then the implementation for that to also be established as well? So the quicker you can get it in there, probably the better. I would assume. Um, we have a little typo there. 401k plan distributions and augmented IRA distributions can be done concurrently. So if you have the 100K out of your IRA and the 100K out of your 401k, you can have both of those out at the same time. It's not either or, so they can be done concurrently. There's not an issue with that. And make sure if you're taking 401k or IRA distributions, you're considered an eligible individual. So for the most part, that's probably going to be if you're still fully employed, if both you and your spouse are fully employed, and you have no and you're not and you have nothing COVID related happening to you, whether that's a positive test or care for a dependent, I'd assume that those rather rare people are going to be the people that they're talking about. They're being very broad with this to try to help as many people as possible. But make sure that you qualify before you start taking money out of one of these accounts and claiming some type of qualified individual status. So the $1,200 is considered a tax credit. There really isn't any way for that theoretically to run out. So you're going to take longer to get that. There wasn't necessarily an allocation for that. That is just money that is being given out, that is being funded by governmental borrowing. And it's straight up money that's going to go to you. So the $1,200 or $2,400 if you're married and filing jointly is not something that, obviously in theory can run out. There wasn't an allocated amount for it. What was allocated was 350 billion for the PPP under the SBA program. So that's what you got to be careful for, and you need to try to get in and apply for sooner rather than later if you'd like to apply for that benefit. So here's another really good resource. A gentleman I've known for a very long time, John Heyer. Some of you may know him. Some of you may not. He is a very, very smart individual and very thorough with regard to any type of taxable or IRA specific question. He taught a webinar that is, you do have to pay to view it. He is an attorney and a tax, he holds, I can't remember what his qualification he holds for tax and accounting, but he also is a tax attorney. He has been practicing for, I want to say 15, 20 years, very, very sharp. The webinar does cost money to review. I think it's like $75 or $90, but it's almost 3.5 hours of content on this, and it goes into very, very great detail on the SBA side of things, calculations, small business, tax filings. Personally, I think I have watched it. I think it's money well spent. Even if money is tight, I think if you are trying to apply for some of these benefits and you're looking for someone that can give you a legal answer on things, viewing that webinar or using someone similar to give you a definitive answer is going to be good money that you're spending on something like that. And if you need something that is not necessary, for you to get a full legal opinion on, schedule a consultation. I am always happy to help people or try to find an answer, so long as it's not something that it needs to be advised on. So please don't hesitate to give me a call. I will be more than happy to answer your questions. My phone number is right there. I'll also send out my email to everyone in the chat box. So if you want to email me a question, feel free to do so. I'll stick around for some questions and answers. Again, so far the questions that I have that I'll send out on the email that we send out with this, the 50K, if you already have the 50K loan out, oh yeah, sure, I'll be happy to go back to the website for him. So the questions I'm going to be putting out on the email when we send this out, and again, please feel free to plug some in, is that if you already have a 50K loan, do you qualify for another 50 or 100? The qualified independent contractor for GA and Florida. I do have a transcript of these, so I'll go through and pull the questions if I don't have them written down. And then whether or not you have to hire back 1099 employees in full, if you are a sole proprietor, if you have to hire them all back and how exactly that looks. I'll try to get some better clarification on that question as well. But again, I'm sticking around. We have about 70 people logged on the webinar, so I'll stick around so there's about 10 or so. Again, I'm trying to help you out in this trying time. We're all in this together. If there's a question I can answer, I want to try to get that answered, or at least be able to research it and get you the correct answer as well. Let's see. Okay, DCS for idle and PPP together. Please clarify grants will be credited towards the maximum forgivable amount under any PPP loan. So with regard to that, that means that however much you can get forgiven, which is the entire amount of that loan. I think that's just kind of the legalese way of them making sure that they cover themselves. If you have other SBA loans or something else out there, it's the maximum allowable forgiveness under that loan, which would be the entirety of the loan balance, would be the best way that I could discern that from what I know about the EIDL and the PPP program that are being implemented. Oh, my pleasure, Phil. Thanks for joining us.